Welcome back. I'm Pratap here. Today is 21st October 2024. In this video, I'm going to evaluate the performance of high liquidity zones generated in the previous end of the day report. Even before that, all of you please understand we are providing complete free training on supply demand zone price action. All the training lessons are available at our NeoStock YouTube channel. So at our channel homepage, you can find the tab posts. Some of you might be seeing the tab community. Whichever the tab you see, you click on the tab, you get access to our pre-training course. Here, this post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into the playlist supply demand zone price action course. Here you have all the training lessons are available. You just need to scroll down to the bottom of the page. Here starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this video description. So in the video description, please find our Telegram link and join at our Telegram channel. It will be useful to you each time when we release a new YouTube video or any other very important updates we will be providing at our Telegram channel. Now let's get into analysis discussion. The last video we identified 7 high liquidity zones. These are the zones generated by our NeoStock software. And out of these 7 high liquidity zones, we got very good trades, and one zone is completely violated. But actually, we didn't get trades in those zones. Why, we will discuss. And also, you will be having a very important learning in that particular stock, that is India Mart. But before that, let us discuss the stocks that gave us a very good trades. The first one is Astral. Astral is a 75 minutes high liquidity zone identified by our NeoStock software. This drop, 3 base candles and a drop. This is the zone identified by our software. And this 75 minute zone is fine tuned with 15 minutes time frame. Here you have a 15 minute zone, you have a rally, base, drop. This is the 15 minute zone. Within this 15 minute zone, look into the 5 minutes time frame. Here it looks like a rally 1, 2, 3, 4 base candles, but this is again a ERC candle, failed ERC candle. This is again a drop candle, in between no base candles. So you can't fine tune the zone properly here. But here we have a 5 minute zone. Look into this 5 minute zone. We have a rally, you have 3 base candles and a drop candle. This is the 5 minute zone. This 5 minute zone is the origin to this entire high liquidity zone. This is the concept you already learned in lesson 22. Lower time frame zone as an origin to the higher time frame zone. This 5 minute zone is the origin to this entire 75 minutes high liquidity zone. That means 75 minute zone picked up the orders from this 5 minute zone, and then entire move has started. That means in this area there is a very strong institutional order flow. And this 5 minute zone is overlapped with this 75 minute zone and also overlapped with this fine tuned 15 minute zone. So definitely you can plan a trade next time when prices are entering into this area, and this definitely it will give a very good trade opportunity. That is what happened today. Today at morning 11 o'clock 20 minutes candle, 5 minutes candle, prices entered into that zone and picked up the orders, and see the huge rejection. And after that you see how sharply the prices moved up to its next 15 minute zone, which is inside the next 75 minute zone. This is the 75 minutes demand zone. Let me show you. This is the 75. We have a drop, 1, 2, 3, 4 candles, and again a leg out candle. Here you have a 15-minute zone overlapped with this 75-minute zone. This 15-minute zone is the horizon to this 75-minute zone that we will see in 15 minutes time frame. So let me go to the 15 minutes time frame. See, here you have a leg-in candle, you have 1, 2, 3 base candles and again a rally candle. This is a medium size leg-in, 3 base candles and a rally. This is the 15-minute zone. This 15-minute zone is overlapped with this 75 minutes demand zone. Actually, this 15-minute zone is the horizon to this entire 75 minutes high liquidity. This is also high liquidity zone, this 75-minute zone. But the order flow in the 75-minute zone is not really good. And what about in between? Don't we have any other 15-minute zones? No, we don't have any other 15-minute zones. This is only the valid 15-minute zone. That's why prices are pushed up to this one. In between, we don't have any 15-minute zone. All these candles are ERC candles. Even if there is a base candle, there is no proper leg out candles. All these structures are not at all good. Again, rally base, drop. See, here you don't have any leg out. Even if you have a leg out candle, here you have a drop candle. In between, no base candle. After that, ERC candles. So the structures are not good. ERC, 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 ERC. So that is the reason why we are expecting our trade up to this zone. So price here we took the order and after that prices came and finally it reached the target at 230 candle, 15 minutes candle. If we go to the 5 minutes time frame, it reached at 240 minutes candle, 5 minutes candle. And when we got the entry at 11:15 candle. Almost 3.5 hours it took to reach this target. And how much profit Astral has given? Astral has given 21,377 rupees profit as per one futures lot. And the ROI based on one futures margin cost is 17.2% ROI. It gave a very good profit during the intraday. 17.2% return on your investment. That is one futures margin cost. So excellent. That is what you learned the concept. It is a new concept I developed. Lower time frame zone as an horizon to the higher time frame zone. All these days you are seeing, we've been getting several trades from this using this concept. Lower time frame zone as an horizon to the higher time frame zone. Many times they gave very good profits to us. And today is one example. It gave an extraordinary profit today. Getting 17% ROI is a very rare situation. Okay, next one is Federal Bank. Federal Bank is also a 75 minutes high liquidity zone. We have a rally candle, you have 3 base candles and then you have a drop candle with the hidden body. At the hidden body, otherwise it looks like a base candle. The moment you add the hidden body, it is a drop candle. The hidden zones concepts you learned in lesson 9.3 and 9.4 in our training course, phase 1 training course. So within this 75 minute zone, we fine tuned with 15 minutes time frame. Look into the 15 minutes zone. Here you have a drop, you have 2 base candles and then again you have a drop and follow through candles. This is the 15 minute zone. This entire zone is the 15 minute zone. Within this 15 minute zone, we have an excellent fine tuned 5 minute zone. This is the fine tuned 5 minute zone. I am going to the 5 minutes time frame. We have a rally, 2 base candles. This is also a medium size like candle, part of the base. But why I fine tuned up to these candles only? Because the move has started from here. If you draw like this is going to be a very big risk. So that's why cleverly what I did, I have seen where actually the move has started. From here the move has started. So that's why I fine-tuned up to these areas. Actually I consider this as a rally candle because this is a big candle, ERC candle, failed ERC. Then base, these two are base, but actual move has started. So I considered this is part of the leg out candle. That way I managed my risk here. This is a fine-tuned 5 minutes. But unfortunately this zone is tested. This is already tested. It is not a fresh zone. That is the reason why actually we didn't plan any trade in this zone. But in today's price action, see what happened. Today morning, at morning 9:15 candle, there is a leg-in rally candle, then you have a base candle, you have a drop and follow through candles. A zone is created. This is a 5-minute zone. This is not a fine-tuned 5-minute zone. So this is mostly we don't care about these zones. But see here what happened after that, the price action. Prices came near to this fine-tuned area within this high liquidity zone. You can draw a zone like this. But why I didn't draw? Because this is exactly within the zone. Because we have to, mostly we plan our trades within the zone. Rarely we take entries outside, but mostly. But before entering into the zone, forget about this 5-minute zone. Before entering into this high liquidity zone, this is the high liquidity zone proximal line. Before entering into this proximal line, the prices moved down. That means there is a strong order flow is there. That is what the first clue we got. The moment we, based on this, why it came, prices came and came down. Look from 75 minutes time frame, you will understand. See here, sorry, not here, it's not clear. 75 minutes time frame. Only 15 minutes time frame you got the clarity. But our zone is 5-minute zone, not 15. 15-minute zone. Prices came near to the zone and came down. Why? What is the reason? Then if you go to this 5-minute zone, then we got the clarity here. Here we have a rally based drop is there. Near the zone, the fine-tuned type 2 proximal area, prices came and they came down. That means in this area, strong order flow is there. So next time again prices enter, you can plan an aggressive trade. So here prices entered and came down. Even if you, because the risk is very high in this area, it's not very high, risk is high compared to the normal. Even if you plan type 3 proximal also, still you get a trade opportunity. See, type 1 level, this is a type 2 level and this is the type 3 level entry. Actually 3 entries it gave. This is a type 1 entry. This is a type 2 entry and this is a type 3 entry. But doing analysis at this level is not really easy every time. That's why let's make our analysis up to type 2 only. We got the type 2 entry. After that, because they went deep inside, because the type 3 entry also it gave. After that, prices were started moving down and finally reached the 15 minutes target. Here you have a 15-minute zone is there. You have a rally, base, rally and follow through candles. And then came down. But some of you may be having some concern here. Where exactly it is? Let me. Yeah. This is the area. Let me draw a horizontal line. You get clarity. Or if required, let me move a little up. Yeah. See, within this area, there was a lot of movement within the. Some of you may think, maybe let me exit here. No. Generally, when prices were moving down, you can keep any 1-minute trailing stop at that area. If that violates, then you exit. Otherwise, you can look for a good trade opportunities. But this is only a drop base, a drop is created. After that, it is violated. This level has been broken. And finally reached the target. If anybody is having concerns, you can use some trailing stop near this area. If that is violated, you can plan, but see here, easily this zone is violated here. And finally it reached the target. Because I'm saying it is a trap. So some people may overreact and they exit within these areas. Because couple of times the prices took the support. So in such kind of situations, use some 1 minute trailing stop related concepts or 5 minute trailing stop related concepts, if any. Based on that only you take the decision. See here, rally base drop is there. This is the first 5 minute zone. Next again, drop base drop. See, sharply after that it came down and reached the target. So some kind of techniques you have to use to protect your profits. But anyway, this is a clean and neat read. The reason why I'm saying, you got the entry at morning 11 o'clock candle, 5 minutes candle, and reached the target at 12:55 candle. In 2 hours, your trade is completed. 11 o'clock and 1 o'clock. You can think like that. In 2 hours, the trade is completed. How much profit it has given? It has given 15,100 rupees profit in 2 hours. And which is 8.7% ROA as per one futures margin cost. So this is about Federal Bank. Next one I told you is India Mart. Actually, India Mart is a 75-minute zone. We are having a fine-tuned zones. This is a rally base rally. This is having a 15 minutes zones, so 2 15-minute zones. This is the first one, rally, 1, 2, 3, 4 rally. And here again a rally, 2 base candles and a rally. The first one is not having a fine-tuned zone. Go to 5 minutes time frame. Because all these are all base candles, so no fine-tuned 5-minute zone here. But here you have 2 fine-tuned zones. So drop, 1, 2, 3 base candles and a rally. Again drop, base, rally. If you draw wick to wick, actually it picked up the orders from this zone and the move has started. That way also you can treat. Again another drop base drop from this zone it created. Maybe it could be a high liquidity zone. This drop base rally. That way also you may think. At the time you can remove this and you can also think this is a drop base rally, wick to wick. This could be a high liquidity zone. Because it picked up the orders and new zone is created. At high liquidity zones only you will see LOTL zones many times. Either way you treat, you can plan a trade. But unfortunately, you didn't get a trade. Just a minute, please. Okay, I'm sorry. Okay, so this is a drop-based drop. You may treat like a high liquidity zone. Maybe it is not 100% correct. At least we can assume such kind of behavior we will see. That way you may feel anyhow you have a drop-based rally is there. Definitely in this area you can plan another trade. But what happened today? We didn't get a trade opportunity. Before you want to plan a trade, market opened with a gap down. When it is opened with a gap down, you can't plan any trade because already the order flow is gone. Why such kind of a strong order flow has gone? What could be the reason? The reason is very simple. You have earnings yesterday. Results were declared. Maybe it is positive or negative. The behavior is unexpected on the next day. That's why always we supply demand zone traders, we say don't plan any trades on or the next day when the results are declared, because the behavior is unexpected. Why behavior is unexpected? It is not the behavior of the demand and supply zone. Institutions might have removed all their order flow. There may not be any orders at all. They might have cancelled their orders. Maybe by seeing the results, or maybe by anticipating the results or the estimates, they take the decision if there is an order flow, because previously zone was created. But they should keep their orders here. If they don't keep, zone still remains there. But there won't be any orders, and the zone will be easily violated. But anyway, it is opened with gap down. We didn't get a chance to place our trade here. But otherwise, what would have happened? So that's why always the most important thing, the supply demand zone trader should focus on any important, especially the results declaration related day. You can't expect the trades on those zones. The movement will be unexpected. If they remove, see, this is a classic example. They might have cancelled all their trades. Opened itself with a gap down today. See, this is the morning 9:15 candle, opened with gap down. Because it is opened with gap down, luckily you didn't get a chance to place your trade. Otherwise, your trade would have been stopped out. Otherwise, we don't know. Maybe stopped out or may not be. But at least by seeing this price action, at least I can say maybe it would have been stopped out if it opened above. Such kind of force you will be seeing in any stock after the results declaration. Maybe on the day of results declaration or the next day of results declaration, you see such kind of price actions. That's why always demand and supply zone price action traders, they advise you. Any senior traders, if you interact, they advise you, don't plan any trades on a stock on the day when there is a results declaration. Okay, anyway, this could be the reason, but anyway, we also didn't get a chance to place an order. Before placing the order itself, the pre-market open itself with a gap down. So as an intraday trader, so you won't be placing any trades here. This is about India Mart. This is one important lesson you have to learn. And the remaining stocks, you have Asian Paints. We didn't get a trade. This is a daily zone. Rally, base, rally. I already fine-tuned this zone, but today price didn't enter. How I fine-tuned? In the 75 minutes time frame. Here I found multiple order flows here. See, this is a drop, 1, 2, 3, 4 candles, base candles, and a rally. This is a medium size candle, but part of the base. This is a drop candle. That's why we have drawn the zone from here to here. I mean here to, from this candle to here. Because this is the drop candle, low of the lagging candle we considered. Drop base rally. This is what our software identified. This is what we fine-tuned the zone in the daily high liquidity zone. Within this 75 minutes, again fine-tuned with 15 minutes time frame. So we have a drop base rally. Now you get clarity. This is a drop candle. We have a rally, 2 base candles and a rally candle. But still I have drawn 5 minute zone, maybe aggressive trade setups. Let me show you. Actually we have 2 aggressive trade setups. See here. You have a leg-in candle as a rally, medium size leg-in. You have a base and rally. Why I have drawn? This is not a fine-tuned 5 minute zone. Because 15 minute zone is here. This is our 15 minutes fine-tuned zone. This is 75 minute zone. But this is not inside the 15 minutes. So it is an aggressive trade setup. Why I considered, is there any price action clue? Yes, there was a price action clue. See here, prices came very near to the zone and then started moving up. It is not tested. Just before entering into the zone, see the move, very big move it started. That means in this area there is a strong institutional order flow. That's why I want to plan an aggressive trade setup. Next, within this 15-minute zone, there is a fine-tuned zone. We have a drop, base, rally. This is a medium-sized candle, but I kept, this is generally you have to keep as part of the base, but why did not include, actually the move started. So that's why I combined this candle as part of the leg out. So this is the area where I am considering the institutional order flow. And here you see you have a drop, 2 base candles and a rally candle. And tested once, tested second time, third time came very close, and again rejections. Maybe this could be a high liquidity zone, maybe institutions are keep on adding order flows into this area. That's why some rejections before this zone. Or maybe this is the drop, base, rally is created, which holded the prices. That could be, or again another drop, base, rally here. But all these are all, this is the reason, this order flow is the reason for all these price actions. So I consider this could be a high liquidity zone, maybe, at least 80% level. So this is the way 3 order flows I defined within this zone. But unfortunately today, we didn't get a trade opportunity. Next one is the NTPC. NTPC already I discussed, so I am not going to explain again in the previous videos. You please refer. This one already I explained. Today also prices entered, but it didn't enter into the fine-tuned 5-minute zone. Just before itself it came down. That's why we didn't get any trade opportunity here. And next one is Balakrishna Industries. This is also a daily high liquidity zone. Balakrishna, sorry, this is a 75-minute zone, not daily. Sorry for my mistake. This is a 75-minute zone. This is the ERC candle, failed ERC candle as a leg-in, can be considered as a drop, base and rally. This ERC can be, because prices are moving down. That way drop, base, rally. Our software also identified the same way. So we have drawn this zone. Within this area, again in the 15 minutes time frame, we have a drop, base, rally, follow through candles. Within this 15 minutes area, we have a 2 fine-tuned 5-minute zones. One is a drop, base, rally, and another one is a drop, base, rally. So 2 order flows. But we didn't get a trade opportunity today. And the last one is a Naukri. Naukri is a 75 minutes high liquidity supply zone. This one, Naukri, have we discussed earlier? Okay, anyway, this is a failed ERC candle, drop, 3 base candles and a drop. This I fine-tuned with 15 minutes time frame, rally, base, drop, and again fine-tuned with 5 minutes time frame. The 5-minute structure is not really good here, but you see here, you have a drop, 2 base candles and a drop, drop, base, drop. Lower time frame zone as an horizon to the higher time frame zone. And today prices entered into the zone, but they didn't enter here. That way we didn't get trade opportunity. So these are the high liquidity zones generated in the previous report. Hope this analysis will be helpful to you. Let's all meet again in our next video. Thank you.